Well, the numbers, I've got to tell you, are almost unimaginable. In just 1 week, Sam Bankman-Fried, who was the founder of the cryptocurrency exchange FTX, saw his business value collapse from $32 billion to virtually nothing. It came after the business had a shortfall of $8 billion and could not be bailed out. But it does raise a question, serious question, why that cash shortfall in the first place? Well, one man who has agreed that he did lose from the collapse of FTX is Mark Carnegie, former principal of Carnegie Wiley and an enthusiastic investor in all sorts of assets, including crypto. And he joins me now. Mark, always good to have you on the program.
Great to see you, Ross.
All right, so tell me, is it a flesh wound or is it something more serious than that?
For me or for him?
For you. Well, that's almost terminal for him.
I think it probably is. No, like we ended up with all but $100,000 off the exchange, but it was clearly a huge blow to crypto to have this happen, where you've got the golden boy who's recruited politicians, superstars, got all of this retail money, and he's done, absolutely the scummiest thing in the world, which is effectively taken other people's money to pay for his failed gambling debts.
So get this to me, because you have always said to me that crypto is the future. It's an asset class in its own right. But it seems to me at the end he needed cold, hard cash, real cash, not crypto cash.
No. If he'd had Bitcoin and Ethereum, he would have been fine. What happened was he minted his own currency, right? So he'd created a sort of mini empire based on something like a sort of Chris Case coin, Chris Case coin or something like that. And suddenly people woke up and said, what's the value of a Chris Case coin? I'd like to move it into Ethereum and Bitcoin. And everyone's like, no, I prefer to keep my Ethereum and Bitcoin.
So tell me, why is it then that Bitcoin and Ethereum also suffered such significant falls?
Not around this. It's been the big surprise, Ross. I would have thought both of them got whacked way harder than they have. If you look at piecing all the pieces together now at a distance, you say Bitcoin, we'll just use that, forget ETH for a sec. It traded between 8,000 and 10,000 a coin. There was some real money in it. Stan Druckenmiller, Bill Miller, Paul Tudor Jones, between 8 and 10,000, where they said this is a plausible case as something that's going to protect us against inflation before that inflation ran. Yeah. And then it went absolutely nuts, right? It went from, call it 11 or 12,000 up to 67,000, and then it's returned back to scratch. It looks like when you put it all together, a huge amount of that run was actually him trading it back and forth to himself, yeah? And it's returned to earth. Now, in the context of a run to 70,000, it looks like an absolute disaster. But for anybody who's a reasonably long-term investor, then the question you've got on a chart at the moment is it going to stabilise at 12,000 or is it going to stabilise at 16,000? And frankly, I'm surprised that it's stabilised between 16,000 and 17,000. And I'm no Bitcoin fan. I'm a much keener on Ethereum anyway.
But then also, does it raise questions about other similar exchanges as to whether they have the liquidity, because there's been wobbles in other areas?
So I think what's clear at the moment is everyone feels at the moment a big sigh of relief in that Binance, which is really the only other significant independent exchange, is standing firm and looks like it has not borrowed customers' money, propped up stuff, or used its own coin to deal with gambling debts. So let's be clear, if it falls, who knows what happens, yeah? But it seems like that it's come under a lot of pressure and withstood it.
So this also comes at a time when central banks, including the Reserve Bank of Australia, are considering their own stable coins and where they go with this. You've had the US Federal Reserve, one of its commissioners, been here this week, governors here this week, again, raising questions about the validity of that. So does that also potentially threaten the future of crypto as an asset class?
I think, which side of the line you choose to call a stable, whether it's part of the new economic ecosystem or in fact part of the old one, is still unclear. because everybody can use a jargon phrase like a CBDC. It falls off the tongue really, really nicely, but what it's going to be and how it's going to behave is still a question. And I don't think your CBDC is necessarily mine either. I think the vacuum created by the US and the euro seizing those foreign exchange reserves has created this opportunity for what I'd call a sort of BRICS plus SA currency, which is, Brazil, Russia, India, China, plus Saudi Arabia, where there looks like emerging out of the fog, there's some sort of consensus CBDC that everyone who hates Europe and hates America is going to trade with.
Because one thing that makes sense to me is that if I were in China, if I was in Russia right now, and I needed to move wealth, and I didn't want my government to know about it, the only way I would do it is through crypto. Is that a reasonable thing to assume?
Well, I think also the question is, what are you going to trade in? If you're the Chinese government trying to trade with the Saudis or the Russians, right? What currency do you trade in at the moment? Because the Saudis and the Russians aren't going to take Chinese RMB, even the offshore one. So don't work that way, yeah? And nobody wants to trade in the US dollar or the euro. So forget all the cryptocurrencies or any of the grey market. The governments have got to figure out how they're going to trade amongst themselves when they don't want to trade in euros or US dollars.
Which is precisely the reason why hackers, such as in the Medibank situation right now, have always traditionally sought their ransoms in some form of cryptocurrency because it can pass borders. It's not seen. This is the reason why crypto, it doesn't just exist for this reason, but it's a reason why there is sufficient liquidity in it to keep it moving.
Exactly.
So, the future, what's it look like?
Well, I don't think you can call it now because obviously the bomb just landed, the bomb crater's there. We don't know who died. We know some people who died at the centre of it, but there's clearly some other people around the periphery that we're still waiting to see. We know there's going to be knee-jerk regulation, some good, some bad, and maybe I come back in 3 months' time and give you a better view. At the moment, the surprises are Bitcoin and ETH are holding up as well as they are, and what does that mean? We're still waiting, as we talked about before in previous things, to work out what is actually the path of Fed policy. And the other thing that seems to be coming back on the platform, the universe of traders' minds at the moment is, after this central bank governor in Japan retires, are the Japanese going to change this crazy lunacy negative interest rate policy that clearly, in the face of all reality, has to change? And once the Japanese end up with loosening up their monetary policy and coming back to some sort of real interest rate, crypto is going to be a pimple compared to what happens to the world financial system.
Tell you what, always good to have you in the program. 3 months' time, Mark Carnegie, we'll be talking again. Many
Fantastic, Ross.